Monday's trading on Wall Street was far from being positive, although major stock indexes closed the session with gains, and they were quite modest. On a Tuesday, risk appetite was even lower, while the currency and commodities markets responded quickly to incoming triggers. The US stock market remained cautiously pessimistic. Analysts at InstaForex closely monitor the situation and are ready to share their insights with you. Meet our fresh video review of the US stock market. On Monday, the US stock indexes managed to add a moderate gain of 0.10 and 0.30%. The benchmark S&P 500 was trading within the predicted range, having gained 7 points or 0.18% to reach 4,365 points. The pre-market rate on a Tuesday saw top indexes entering the red zone. Thus, index futures were trading below the range of 0.01 to 0.12%, indicating a slow start to the day's trading session. As for the outlook for the S&P 500, it's expected to stay within the range of 4,340 to 4,376 points. In the best-case scenario, it may climb to 4,398 points, while a more pessimistic forecast suggests a potential drop to 4,310 points. Despite 6 consecutive days of gains for the Dow Jones and the S&P 500 and 7 straight winning sessions for the Nasdaq, the sentiment on Wall Street has grown more anxious. In a late Monday statement, Minneapolis Federal Reserve Bank President Neel Kashkari dampened hopes for a near-term reduction in interest rates, suggesting that the central bank has much more work to do to control inflation. The hawkish policymaker pointed out the lack of significant signs of easing price pressures, reintroducing the possibility of another rate hike before the end of the year. Conversely, Lisa Cook expressed hopes that the current level of Fed interest rate will be sufficient to bring inflation back to the 2% target. Further insights came from the Federal Reserve's quarterly survey of loan officers, which was released late on Monday, and the survey revealed that banks have tightened lending standards for business and households during the third quarter. Moreover, it indicated a general decline in the demand for loans. Additional pressure on the stocks came from the yield on a benchmark 10-year Treasury notes, which rebounded to 4.668% on Monday from a 5-week low last Friday. Notably, this week will witness a series of Treasury auctions totaling around $112 billion. By Tuesday, bond yields had retreated slightly, but the futures on stock indexes had already caught the sour mood. The early optimism about the potential Federal Reserve rate cut next year has dimmed, with the market tensions rising in anticipation of a further commentary from central bank officials. In light of Monday's comments, market participants will scrutinize upcoming remarks from Federal Reserve officials Christopher Waller and John Williams to gauge additional insights into the central bank's interest rate trajectory. Federal Reserve Chair Jerome Powell's statements will be particularly in focus on Wednesday. In addition, today's data showed that the trade deficit in the U.S. widened to $61.5 billion in September from an upwardly revised deficit of $58.7 billion in August and market expectations of $59.9 billion. The corporate reporting season is coming to an end, and most of the companies in the SP 500 index have already released their third quarter results. eBay is among those scheduled to report later Tuesday evening. The energy sector is winning on the indexes today. Shares of oil companies including Exxon Mobil, Chevron and Occidental Petroleum were down between 0.8% and 1% in a pre-market trading following lower crude prices. Among individual companies, Intel inched up by 0.6%, as the chip maker was a leading candidate to potentially receive billions of dollars in a government funding for secure facilities producing microchips. In the currency market, the US dollar index was able to recover some of the last week's losses. The index was supported by ambiguous comments from Fed speakers and the doubts they sought about the future of monetary policy. As a result, the US dollar index was up 0.4% by the opening of a US trading, reaching 105.65. As for the trading outlook, it's expected to move within the range of 105.20 and 105.80 points. The US dollar is strengthening on doubts that the Fed has finished its tightening cycle. Next week's CPI data may become a game changer, but now markets can only digest hints and comments from the Fed speakers. In addition, the economic weakness in the Eurozone and major economies continues to contrast with the data on the US economy. In the short term, the US dollar could rise slightly, but more data is needed. As for the Canadian dollar, the loonie was once again under pressure from the rising US dollar and falling oil prices. As a result, the dollar-loonie pair gained 0.145% and reached 1.3758 in early trading. The pair is projected to trade within the boundaries of 1.3720 and 1.3810. The confrontation between bulls and bears in the cryptocurrency market continues. In the absence of market triggers and clear trends, cryptocurrencies are testing the boundaries of their trading ranges. In addition, the general sentiment is muted today. At the opening of the US trading, Bitcoin moved to $34,750. As for the trading outlook, bulls have been quite successful, holding the BTC price above 34,700 and preventing the asset from slipping lower. If Bitcoin drops below $34,600, it may test $34,100. An alternative scenario suggests that the flagship cryptocurrency may test $34,900 and climb to the target of $35,100. And with that, we wrap up our daily market overview. If you have any questions or want to share your view with us, feel free to write a comment. We are always open to feedback. Don't forget to subscribe and turn on the notifications to always be aware of the latest trends and changes in the market. See you online tomorrow.